Welcome to my weekly market roundup 27th February 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel and Twitter page. You are most welcome to make use of them. Hi Fran, good morning. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my live trading, and these are the same systems I'll use today. They are based on these underlying platforms, TradeStation and MetaStock, and I use Zenith data for systems based on MetaStock. That was the last slide of the presentation. Let's continue with the live system. Hi Mike. Let me first introduce you to two enhancements I am working on. One is this indication that comes after an up move or a down move. This indication shows whether there is indecision. They come either after an up move, prolonged up move, or after a prolonged down move. If the indecision comes in between the extremes, then we are not interested in it. We are interested in indecision at the end of a down move or at the end of an up move. They are plotted using different colors, orange colors at the top and gold colors at the bottom, not red or green. That is to distinguish them from the signals used in trade setups. For example, this bull release signal green and bear release signal red. To separate from those trading signals, the indecision signals are colored as orange at the top and gold at the bottom. I have not released these changes yet. I will be releasing them in the next general release. That was in Q Global, and if you use Q Elite on TradeStation, again you have the indecision signals at the bottom, gold color, or at the top, orange color. How to use them is, if we see indecision, we may get ready for a reversal trade. That is one way of using them. Get ready but not execute the reversal trade. The reversal trade will be executed based on Q standard trade setups, either headwind or bounce or box. We will not take a reversal trade just because an indecisive shape candle has come, but we can get ready to take a reversal trade, and also it will help us decide how closely to protect profit in existing long positions or existing short positions when the reversal indecision comes. Not reversal, the indecision signal comes. These signals, indecision at top, indecision at bottom, are there in both Q Global and Q Elite, and I have also added it to Q Elite's sonar or radar. Therefore, in addition to reading the other signals that were already there, the indecision in sonar will show us the picture even before we open the chart. Another addition to Q Elite Sonar is the pullback. If you remember, on Q Finder, we already had the pullback. That is a technique to take long positions or short positions. That pullback is now added to Q Elite also. Now Q Sonar or radar has limitation. It cannot run on 2000 plus data. That is why for Elite I have added pullback to the sonar, and I have also created two scans, long pullback and short pullback. Therefore, if your symbol list is thousands of stocks, you may use the Q Elite scan, and if you have lesser symbols, say 200 to 500, then you may use sonar to know the pullback and other signals. Those are few enhancements I am working on. I am using them, and after some more testing I will release them. I am sure you will love them. In this session I am also going to show you some ways that I use the Q systems with the powerful Q Zenith platform to complement decision making. How I read the macroeconomic data. When some traders read macroeconomic data, let's say home building data is positive, they may rush to buy home building stocks. However, I don't do that. Hi Jeffrey, you will be one of the first people to get it. you like toys. Okay. Now, coming back to macroeconomic data, some traders who follow macroeconomic data, be it on CNBC or they may be looking at Bloomberg or Wall Street Journal or maybe Reuters data, they economic indicator, they rush to trade based on whether the result is positive or negative. I am going to explain how I use the macroeconomic data. First of all, I am using the economic monitor application on Zenith. As you know, the only systems I use are based on Q Global, Q Elite, and Q Zenith or Metastock Zenith. Zenith is the underlying platform for data source. For economic data also I use Zenith, and I have set it up for this USA market setup. I have tracked only the USA economic indicators. I am looking at the economic events of medium importance to high importance. If you are using Zenith, you will see there are different event types that you may track. For stock trading, as you have seen here, you are seeing here, the important ones in my view are the 9 out of the total 13 event types. Some of the event types I omitted because they does not affect stock trading. And let me show the drop down. Later on you may pause the video and uncheck the ones that I have unchecked, or you may play around with the different events. Probably will find agriculture, commodities, industry sector, money and finance. Unchecking them is useful. It removes the clutter and it still gives us all the important events we need to know of. During the weekend, I use the weekly view to see in the coming week what are the events that are coming. And as you can see, Case-Shiller is there on Tuesday, housing related, consumer confidence, some GDP information on Thursday, jobless claim also on Thursday, personal income, personal consumption, PMI and consumer sentiment data on Friday. So a lot of events on Friday, considerable number of events on Thursday, some on Tuesday. Nothing on Monday, nothing on Wednesday. If you are following this approach of studying the events during the weekend, what you will see that when there is no event on Monday, Monday tend to be directionless. Not guaranteed, but it is more likely it will be directionless. And usually for the USA market, Mondays are usually not having so many events. That is one reason why Mondays are generally less directional than the other days. And that is why Thursday, Friday may tend to be more directional because many of the events happen on Thursday, Friday. This is useful background information. The actual trade setups are using the Q trade setups, but this is useful background information. I use the weekly view during the weekend to see what is going to happen in the coming week, and during the trading day I switch to the daily view so that I can see the events, what time they are occurring, and after the event has occurred in real time you will get to know the actual data and compare that with Reuters smart estimate. You can see I have arranged the template in such a way that actual is first, then smart estimate, not the average poll. There is a difference between average poll and smart estimate. Smart estimate is the estimation of the top people whose past prediction helped, not helped, whose past predictions closely matched the actual data or trend. So that is smart estimate. I rely that on that more than the overall poll, because the poll may include people whose estimates are not reliable. So I'm looking at smart estimate and checking that against the actual to see if there is a difference or not. And when the difference is substantial, you will see this indicator flashes. Lightning up arrow when the actual is higher than the highest poll data. For example, here the actual is 10.1 for Case-Shiller and the maximum polled was 10.0. So it is higher than the highest poll data, and then this lightning up arrow will come. Similarly, a lightning down arrow will come when the actual is lower than the lowest poll data. I usually am not focusing on the right side. I am focusing on this extreme gauge and comparing the actual with the smart estimate. That will define more whether the market will move or not. Not guaranteed. Again, we will take trades based on Q setups, but if you lay out the economic events in this way, focus on the 9 of the 13 events, the medium impact and high impact ones, use the weekly layout during the weekend and daily layout during market hours, you will have a good sense of what may happen. Now, I started the session discussing about the economic events, saying that I use the events data in a way that may be contrary to what many traders do. For example, if consumer confidence data is positive, they may rush to buy stocks related to consumer confidence, say retail stocks. If Case-Shiller data is positive, they may rush to buy housing related data. However, I don't do that. Instead, I first try to establish based on historical analysis that positive Case-Shiller data, for example, did it lead to housing stocks going up or not? That is, whether the Case-Shiller index, is it positively correlated to housing stocks or is it negatively inversely correlated? And there is a way to find it out in Zenith. When you see all these indicators, you may click on one of them. So let's look at Case-Shiller. It is going to present us with a graphical form. What we can see that I am plotting it for over 2 years. You may change the duration if you want to higher or lower duration. You can see Case-Shiller came down, started to go up, little bit pullback, higher high, higher low, and went up again. For the 2 year period, we are at the highest level. 10.1. And what did we see just now? If we switch back to the daily, is not only the highest over 2-year period, it also came above the highest bold value. So that may be what CNBC is saying, and that may be what people are using to decide to buy housing related stocks. Now, if you don't know about some of these events, what they represent, this one I cannot see. Maybe there was another Case-Shiller index. Let's look at that. This one. If you want to know what this indicator is about, this is the same Case-Shiller. You may read about it, that it is about housing. We don't need to know the actual calculation. It is about housing. It is about aggregate data from 10 cities or 20 cities. The cities are listed. That's fine if we are living in a city that is not in those 10 or 20 cities. It's an aggregate data. You may sometimes look at it to see what it represents. If you read that, then it may say housing activity. So is it positively correlated to housing? In Zenith, we can find out. Here we may add an instrument to this plot of Case-Shiller data. Let's add XHB. That is the home builder CTF. Here what we will find out that the market seems to predict what is going to happen before it actually happens. Here the Case-Shiller index was going up, XHB was going up. XHB dropped first. Case-Shiller dropped later. XHB picked up to the upper side first. Case-Shiller followed it. It is still going up. Case-Shiller has tilted little bit. We'll have to see what happens next. From this study, it seems that XHB is preceding Case-Shiller index. XHB has not come down, and Case-Shiller is tilting down little bit. We cannot infer anything based on that, because even if Case-Shiller drops, we don't know if that will lead to a drop in XHB. Why? Because in the past, XHB actually preceded the Case-Shiller move. XHB has not dipped, so even if Case-Shiller drops, doesn't mean we need to think about exiting XHB long positions. Of course, again, our actual trades will be based on Q trade setups and Q exit plans. This is useful background information. This is Case-Shiller. Let's take another example. We have consumer confidence that is related to retail spending. Let's have a look at the consumer confidence. Again, I am using 2-year period. It was flat for a while until Jan-Feb of 2020. Then it dropped sharply during the COVID period probably. Now it is up down, moving in a sideways manner at the bottom. If we look at it, what are we going to do? When consumers' confidence dropped sharply here, should we sell retail stocks? And now it is at the bottom. If it starts to pick up, should we buy retail stocks? Let's find out. There is an ETF, retail ETF XRT. Let's plot it along with consumer confidence data. What we see is very interesting. When there was a huge drop during the COVID early period, soon after that, retail stocks started to rally. Consumer confidence remained low. Now, retail ETF is at the very top. Consumer confidence is actually near the bottom. It may be starting to go up. Now, if we see a headline news that consumer confidence is starting to go up, should we buy retail stocks? Maybe not. We will be cautious, because here we see, at least for this period, 2-year period, the consumer confidence actual data, this macroeconomic indicator, seems to be not positively correlated with retail ETF. So if consumer confidence goes up, that is not going to let me decide to buy retail stocks. If anything, I may be cautious. Again, the actual trade decisions are based on Q techniques, but this is useful background information. So next time when you see a headline news on CNBC or Wall Street Journal about consumer confidence, Case-Shiller, employment data, you may first check the historical performance of that indicator, economic indicator, against a related ETF to see how they did, and then decide if they are positively or negatively correlated. That will be useful background insight. Only then you may decide that if the macroeconomic event is positive, should I think of buying more in that related industry or not? Maybe I should be cautious about my existing long positions. That is the way I look at macroeconomic events, starting with again the economic indicator app and then drilling down when new events come. And I am able to know what events are going to come from the weekly view well in advance. That is the way I look at macroeconomic events. If you are using Zenith, you will find it extremely useful to see the actual data, to see the lightning up down moves, and also to check whether it is positively correlated or inversely correlated with related details. Extremely insightful in my view. Another useful applications I wanted to share with you is of the event chart. In the market, certain up moves and down moves are related to important events. And when you know about the event, you have more confidence to hold on to a stock for longer period. For very short term period, neither these economic events nor the event chart that I am going to discuss now are so relevant. But if you are planning to hold the stock for longer term, even several weeks or months or years, certainly for months and years, even for several weeks, not the typical short term swing trades holding period average is 5 days, not for that probably, but for longer term trades, you may keep an eye on what is leading to the stock move. Sometimes we don't know, but oftentimes we know, and the best way I have found to know that is using the event chart. Just a simple candle chart with the Reuters briefs, and these briefs include everything, all the important events, news about the stock. This includes earnings, this includes dividends, this includes other important events. What are the important events that may lead to significant price move? These are the few I may note, and you may study the briefs more and more. These are called Reuters briefs to add to that list. What are these? These are certainly earnings, drugs announcement for biotechs, or even positive data for biotechs, dividends, not so much. Dividends doesn't lead to a stock's price moves, earnings does. A company's acquisition of other companies, significant resignation like CEO or CFO has resigned, or significant new appointments of CFO, CEO, etc. Entry into new market, new product rollout, and new alliance or partnership, new geographies. And we will come to know about all those important events from this single place. I'm here looking at ExxonMobil. By the way, one of my MBA classmates just got appointed as the APAC chairman for ExxonMobil. A lady, Singapore based, Geraldine Chin. Uh, very happy to know that. Very determined, very efficient person. We went to MBA class together. ExxonMobil is a great company. It declined in the past, but you can see in recent periods it has moved up. Now, if we look at the bottom of the price move, the up move started after certain events. Let's look at the events. If you click on the B, ExxonMobil says plans reduction to US staffing level. That may be bad for the staffs, but it may be good for the company. And then there is a quarterly result, reports certain loss. That's fine. As I mentioned, both of these are important events. Certainly the earnings and also planned reduction of staffing that reduces costing of the company, that may also lead to a price move. After that, there was a gap up move, pulled back, and it went up again. So if we followed the Q technique, earlier it was in a downtrend, we were not going to buy. There was a gap up, however the gap up had an upper tail. So we would wait for a pullback, then for it to go up again. If we had a bullish flow on this candle or even on this candle, that would be the first go with flow trend following long trade opportunity after this long downtrend. That is how we would use it. And once we know that this gap up move was actually in response to the earnings data and the staffing reduction, the immediate move following earnings first few days, that may be shaking out the weak hands, but this gap up move and then the pullback and going up again, we would be more confident buying at that point and holding it for the longer term. And along the way, we may keep an eye on the events that are happening at the swing highs and swing lows. That will help us decide whether to book profit or simply move the stop loss to successive swing lows. For a longer term holding, one technique is to not use the trailing stop hugging the price, because that trailing stop, as I mentioned, that trailing stop will get stopped out by these swings. If we want to hold it for a longer term period, then the Q guideline is to move the stop to successive swing lows. So first entry would be here, first stop would be here, next swing low, move the stop, next swing low, move the stop, next swing low, move the stop, next swing low, move the stop. One would still be in the trade for longer term. So these briefs you will find extremely useful. It is using event charts on Zenith. Now let's look at ExxonMobil, the same stock, using Q charts now. The event that we saw that happened somewhere here, we would know that it was already approaching a previous low. Then the event happened, the gap up happened, and in the daily chart, the time period was this one. The first gap up with an upper tail, we wouldn't buy. We would wait for a pullback and then a cyan flow candle, which was this point. So this would be our first go with flow trend following long trade with a stop below the swing low. The stop was never hit, and since then the stock is steadily going up. If it was a short-term trade, the initial risk would be covered by the time price came here. Short-term traders who like to book profit when the resistance is covered could exit the trade here. Position traders would continue to hold the trade as the stock went higher and higher, giving higher high, higher low. It never came down. There would not be any reason to exit the trade. That is how you may use the Zenith event chart to see what is going on. And interestingly, even if you looked at GameStop, that was the first stock that started the manic aggressive up move in some of the heavily shorted stocks here. If you are following, you would know there was actually some basis of the way whoever planned the rapid up move, buying the heavily shorted stock, there was a reason for GME. That reason was here. It had earnings, and the earnings was actually better than one would expect for a stock that was so heavily shorted. 4.8% increase in comparable store sales and a 309% increase in e-commerce sales. Though it is a brick and mortar shop, GameStop, they had a 309% increase in e-commerce sales for 9-week holiday period. So those were positive news. That was probably a valid reason for some players to try to buy it aggressively and stop out the shorts. It didn't happen out of thin air. There was a reason, and you could find the reason in most cases from these brief charts. I look at this when I am thinking of buying a stock for longer term, not just quickly selling it after the risk resistance is covered. That gives more confidence on whether to hold the stock or not. And if you looked at the brief at the top, you would know something about the brokerages stopping too much buying in the stock, etc. You will come to know of it. Again, that actual trade setups are based on Q systems, but the briefs will show us, I think, better than from any other source you use or I use currently, unless somebody is using Bloomberg data. This Reuters data based on which Zenith is based will give you the complete picture of what is going, whether it is in terms of macro data as I showed, or based on events, important events happening in a company. And if a viable gap up is coming because some CEO or CFO is getting appointed, those viable gap ups may be more reliable than a viable gap up where there is no news at all. You may keep an eye on these news briefs for that. That were some of the ways I use Zenith. Now let's go back to the regular market analysis. Already 30 minutes. I hope it was useful. Let's see, I can finish within 1 hour or not. I have a suspicion I will go beyond 1 hour because I wanted to discuss some of the recent trade ideas I suggested. Let's see how far I go beyond 1 hour. Back to our usual market analysis, starting with global markets, AXJO, Australian Index. For global markets, the only resource we can use is Q Global running on Metastock because that allows us to study global markets. Now you can see the usefulness of the new indecision indicator. There were indecision for many days, and these indecision candles come only after an up move. Earlier I mentioned in several webinars it was in a megaphone pattern. Then there was a bearish headwind. That candle had bearish shape, bearish color. The backdrop color at that time flipped to magenta from cyan. So it had a large number of bearish signals. It was preceded by a large number of indecision candles at the top. It was followed by another bearish shape candle, another indecision candle at the top, and this week it dropped sharply. Looking at these Q signals, we would be cautious, as I mentioned in previous several roundups and YouTube live session. We would not buy at the top. Now price has dropped. Now others may be taking notice. Are we going to sell now? No, because it is right at the trend line support in the weekly and it just crossed below trend line support in daily. If it can recover above the trend line support, that will create a false downside breakout. Those are the points we may look for buying opportunity. We avoid buying at the top when we have warning signals, and we buy at the low point when others may be selling. I see there was heavy bearish pressure on Friday, very high volume on Friday. If it reverses, this may be stopping volume to the downside, stopping bearish pressure to the downside. And I would not mind buying into Australian market next week if AXJ regains this trend line support. That is why we Q traders tend to be ahead of others. Knowing that we are not going to buy, maybe we've been shorting, and now knowing that it is probably time to buy. We'll keep an eye on that. For a longer term period, it is in an uptrend, and at the right edge it is at support, not a time to short. Let's look at Japanese market topics. Very useful similar pattern, isn't it? When the bearish headwind came in weekly, the indecision signal at the top, bear release at the top, we wouldn't buy at those points. However, people were thinking the market was bullish or not, we wouldn't buy. Now market has dropped, Japanese market, sharply. But now again we see it is right at trendline support or just below trendline support in daily. There are other trendline supports in daily. This is not a point to short. Very similar picture to Australian market. Heavy bearish pressure, not very high volume, but high volume shown by thick line. There is no dot this week, therefore it's not very high volume. Still, if it goes up, regains the daily trendline support, that would give low risk buying opportunities in individual fundamentally strong stocks. Overall, longer term period, it is in an uptrend. Right now it is at support, not a time to short, probably time to look for buying. China market, CSI 300. This had an indecisive shape candle 1 week ago. This week it displayed a bearish headwind, dropped sharply. Friday it has an indecisive shape candle, doji candle, bearish pressure, high volume. Here we don't have any trend line support. Therefore, if I was looking for buying opportunities in global markets, I will rather use Australian market or Japanese market, not Chinese market, because it has no trend line support. The next support is maybe the white direction line that is far away, and the next trend line memory support is further away. Australian and Japanese markets are more suited for immediate buying opportunities. Let's look at UK market now. FTSE index. It was moving inside a triangle pattern in weekly, also daily. The weekly is coming out of the triangle pattern, breaking below support. This week's backdrop color is bearish. Previous week it precisely reversed from the trendline resistance. The weekly is looking bearish. I would like to short. However, daily has a trendline support right at the Friday's close. That is not allowing me to short. If it goes up, shall I buy? It is possible because it is at the lower edge of a sideways move. Last several times it reversed from that price point. Therefore, I am allowed to look for buying opportunities if it reverses from the daily trendline support. Is it as attractive as Australia and Japan? No, because Australia and Japan are having trendline support in weekly also, but FTSE doesn't have that. FTSE weekly is quite bearish. So again, for global markets, I would rather use Australia and Japan stocks, not China certainly, and not FTSE right now based on this global index analysis. Now let's look at India market, Nifty 50. That was the strongest of the global markets, and it is probably remaining that, though it has also weakened. And it dropped right after displaying the weekly bearish headwind. If you look back, the previous weekly bearish headwind also led to a pullback. And again now this bearish headwind led to 2 successive weeks of pullback. In the daily we have now lower high, lower low. Therefore, technically we have a go with flow short setup on Friday. However, there is a trend line support nearby. That is probably preventing me to short in the India market. Overall, in the longer term, of course, it is in an uptrend. I'll be happier to see what that price coming to this or this trend line support reversing up from there, that will give me bounce kind of buying opportunity. In individual stocks, those maybe go with flow trend following trades also, because fundamentally strong stocks may not drop so much. They may continue to have swing high, swing low, higher high, higher low. Therefore, if price bounces up from here, I'm going to buy. But if price bounces goes up on Monday itself, I will not be so happy to buy, because it is not reversing from any support, neither from the yellow direction line nor from this trend line support. Having said that, some of these markets, India market is one of them, certainly USA market also, the mega caps carry a lot of weightage. And if I look at the India custom mega cap top 20, it is right at trend line support in weekly and daily. That is a point where I expect a reversal, and if that reverses, the India market will most likely also reverse. That will lead to buying order flows across the market, and that may be time to buy individual fundamentally strong stocks. That is one reason at Friday's close I was not ready to short India market. And not only that, if I look at the USA market, the same reason was there for me not to short USA market on Friday, even if others were thinking of shorting, thinking of saying this has happened. For example, Nasdaq has, NQ has broken a support 1300 something, 13,000 something. Those reasons are valid reasons, but I rely more on the trend line support resistance shown by memory line. And this is now USA custom index for mega cap top 20. Remember earlier when price was here, I said I was not going to buy. Then it displayed the newly designed indecisive candle, bear release, traffic light turned red, it dropped. Where did it stop on Friday? Right at the trend line support, both in daily and weekly. It is more likely price will go up from here, just a little bit at least. That is why I was not going to short USA market on Friday, even if other people were bearish. I would have shorted. I actually shorted the market earlier using ETF verticals, and I booked profit. I think I mentioned about it in the last webinar also. Now, if we look at the USA market ETFs, for that let me use Q Elite, starting with S&P 500 ETF SPY. By the way, these bearish headwinds, the more you study them in the market indices, in the USA ETFs, USA indices and individual stocks, the more you will be able to incorporate in your trading technique. When we saw, at least I saw and I shared, many of these bearish headwinds in global indices, USA market ETFs, USA stocks, I was already shorting. And when it dropped for a few days, those individual stocks dropped enough for me to book profit. Right on this day, in fact, I was suggesting buying. I did buy some stocks also, and now it has pulled back. At the right edge, it touched the yellow direction line and little bit went up. Friday's candle shape is indecisive. Weekly is bearish. The next trend line support is little bit far away. If price came to the trend line support on Friday, just like the mega cap top 20 index in USA, then I would probably consider buying some stocks on Friday itself. I might have bought some stocks also. I will share some of them if we have time today. If I had bought something, that is because of the trend line support in the mega cap, and let's see if there was support of some other kind. We can see yellow direction line is there in SPY, that may act as a support. Let's look at DIA. DIA picture is similar to Australian market, Japanese market. It is at weekly support. Daily has broken below the trend line support, but it may regain the trend line support on Monday. That will give me a buying opportunity. There is heavy bearish pressure Thursday, Friday, very high volume also. If it regains the trend line support on Monday, this will be stopping volume. That was one thing I had in mind if I bought any stock on Friday. Nasdaq ETF QQQ, similar to SPY, weekly bearish, daily pullback. For 1, 2, 3, 4 days it is moving sideways, holding to the lows. And when the mega cap top 20 is at support, it is expected that QQQ will hold to the lows, because QQQ is largely influenced by those mega cap stocks. Some of the mega cap stocks, most of them are tech stocks. Therefore, if the mega cap top 20 is holding support, I don't expect QQQ to go down suddenly. In fact, on Friday we had bullish very high volume. We'll see if it can go up next week. And Russell 2000 IWM, again it dropped after the bearish headwind in weekly. It is holding on to the lower tail of this day. Friday has indecisive shape candle. It has no support nearby, neither the yellow direction line, certainly not the trend line support. So IWM itself is not telling us that it is time to buy, but QQQ, the mega cap, top 20 index and DIA is telling it may be time to buy. Now, if I at all wanted to buy, which stocks should I buy? I'll come to that, and I will share some stocks and how I found them. But let's look at the sector, industry and technical breadth first. Buckets. Let's look at the buckets. This is something I incorporated in Q Edge because I saw Dr. Jeffrey was using it. HSI users were using it, or Edge Rater users, I may say. Couple of days ago, I shared a tweet and I showed that the extreme bucket that jumped during the day from somewhere around 5 to 20. And I tweeted about it. I don't know if I can locate the tweet. Let's look at it. Twitter doesn't make it very easy to search. Let's see. This one. Yeah, this was the first. On 25th, no, this one. This was the first one. Is it this one? Yes. I saw that the percentage of stocks in the highest bucket. What are these buckets? If you think of a stock moving inside its natural range, every stock has its own natural range based on statistical calculations of standard deviation. If we consider each stock has a natural range, a stock is at the highest bucket when it is above the natural range. It is in the lowest bucket when it is below the natural range, and the range itself is divided into 10 slots, 1 to 10. So we have 12 buckets, 1 to 10, 10 segments of the natural range, less than 0 below the natural range, and greater than 10 above the highest natural range. And on this day, using real-time data, you can see this change. This light green, previous days percentage, that was somewhere about 3% below 5% line. From 3% it jumped up to 21% or so during the day. When I saw that, I commented on the way to getting overheated. On that day, market was very bullish. That was 24th February. And I followed up with a tweet next day. See what happened next day. From 21, it dropped back to closer to 5, about 6 or so. So the overheated condition went away within one day, and the sector, industry stocks reversed. That was a sharp reversal, and we could anticipate the reversal somewhat from the first tweet I shared, or if you are using QH, you could see that in real time. When this huge jump happened, we could anticipate that it was getting overheated. Now, the overheating can be seen in two ways. One is, as Dr. Jeffrey uses, when the percentage of stocks in the highest bucket, and let's go to QH, when the percentage of stocks in the highest, not that way, percentage of stocks in the highest bucket goes to say 30-40. Another way that I saw during the recent reversal, when the change is sudden by 10% or more in the highest bucket. So what we had was a jump from 3 to 21, that was 17 percentage point jump in one day. That sharp up move was saying that it may be getting exhausted, and that came true. It reversed the very next day. That is one way. A single day jump up 10-15% or more, and the second way is when we see the percentage come to 30 or 40% in the highest bracket. Right now the market pulled back and it is not overheated anymore, so we may expect it to go up. Overall, it is still bullish. The bars to the right of the midpoint are higher bars, so right now it is still more bullish. The percentage of stocks above mid bucket is 55%. Last week it was, yesterday, Thursday it was 60%, so it came down little bit, but it is still remaining bullish. The sector industry stocks declined Friday. Let's look at the longer term picture. The more you use the Q systems and the underlying platform Zenith, you have more and more confidence to decide the market trend. And once you have got the market trend correct, most of the time, making profit from individual stocks is easier, lot easier. And when you add to the market trend decision the objective industry strength analysis from keyword, your likelihood of making trade from individual stocks is much higher than just using technical charts. Let's create that overall view. Now looking at the 1 month to 1 day sector industry stock advanced decline breadth. 1 month is remaining bullish for many weeks and months. Even the recent sharp downturn didn't change the monthly period bullishness. It is still remaining bullish. 10 days, we may say overall it is balanced, not bearish yet. 5-day, 2-day and 1-day period is now more bearish. And we can see 2-day period is the most bearish. So Friday was weak, but it was better than Thursday. That may lead some support to the idea of buying some stocks on Friday. Maybe. It's not bullish, of course. On Friday it is not bullish. Today not bullish. However, we see the weekly period, 5-day period is not bearish also. It is balanced. So that allows us to buy. The weekly period is not bearish. If we look at the technical breadth, very useful. Let's look at the weekly period first. Balance between bulls and bears. In terms of technical signals, it is very bearish this week. 79% of all signals bearish. Strength signals 84% bearish. Trend continuation 74%. Even reversal signals 82% bearish. And we still have a large number of bearish headwinds. We saw earlier this count even higher. It has come down because of the stocks coming lower somewhat, but we still have a high count of bearish headwind signals, 113 in the weekly interval. Of course, this depends on the stocks that we run QFinder on. This time I ran on all the liquid stocks and S&P 1500 stocks. That is 113 bearish headwinds in the weekly interval. Overall, the weekly picture is very bearish. This is interesting, isn't it? In terms of technical breadth, weekly picture is bearish, but if we look at the sector industry stock advance decline, that is balanced. It is not that bearish. Now this Q edge analysis is based on S&P 1500, and I ran Q finder on S&P 1500 plus liquid stocks. What it seems to show that when I included all liquid stocks, there were many stocks that were lower priced, not the top S 1500 stocks. So the weakness was there in broader unknown lower price stocks more than higher price stocks. That is what seems to be the conclusion when you look at the extreme bearishness in the finder weekly picture and see that the weekly picture for sector industry stock advance decline is not that bearish. So the mid cap, higher cap stocks didn't drop so much as the small cap stocks. That seems to be the conclusion. And if we look at the daily picture, Q finder technical breadth analysis, all signals still bearish 71%, strength signals still bearish 88%, trend continuation still bearish 74%. However, reversal signals are more bullish than bearish. That gives some support to the idea of buying stocks, some stocks at least on Friday. Not very strong support, but some support. Overall, we have to say Q finder weekly and daily both are bearish. There is no another way of saying that. However, again, the reversal trades are supposed to be taken when the market is down. So not that we cannot take trades now, but maybe take reversal kind of trades. Or strong fundamental stocks may not drop so much. They may give trend following trades also at swing low. Let's now look at the market internals to complete our market view. Mega cap top 20 index we already saw. Let's have a quick look at it again. That is at trend line support both in daily and weekly, and that certainly gives support to the idea of buying some stocks on Friday. If we look at the major indices daily to see the percentage MA calculations, major indices, that is Dow Jones, Nasdaq 100, S&P 1500, 500. Here I am focusing on the percentage MA calculation. Stocks where 50 MA above 200 MA, that is holding steady. It didn't come below the average line for all the four indices. Stocks where price is above 50 MA, percentage of stocks, that is tilting down. This is already created lower high, lower low, and tilting down again. Same is now true for the percentage of stocks above 200 MA, also reversing, tilting down. And now it has already tilted down, but as you can see from my YouTube live sessions, that we could anticipate this down move in the market ahead of others because we were looking at these market internals. Percentage MA calculations were showing that it may come down, and also the very useful new high low and up down volume, that is more useful using the weekly interval. I mentioned earlier it was tilting down for all the four major indices. Up down volume was also tilting down, so we could anticipate a market downturn. Now it is at support, at least some ETFs are at support. Mega cap top 20 is at support. We'll see how the market goes next week. And the extremely useful total view market breadth I shared on Twitter earlier, it did give a distribution count of 3. No major market drop has happened without a distribution count of 2 or more. So we had a distribution count of 3 on Thursday. So that may lead to a further down move. May not happen right on Monday, but I will not be surprised to see if market pulls up somewhat and goes down, or it may go down on Monday also, but I think that is slightly less likely because the mega caps are at support. But I will not be surprised to see if it goes up a little bit and comes down again. The market breadth total view percentage MA calculations for stocks above 50 MA, stocks above 200 MA, both are tilting down as you would expect. And in this picture you can see I have changed the colors. Whenever the distribution count is 2 or more, it is red color, like here, here, here. If it is 5 or 6, then it is magenta. So if it is 2 or more, red, 5 or 6, magenta, and if it is distribution count of only 1, then it is orange. Similarly, gold color, if accumulation count is 1, 2, 3, 4, it is green, and 5 and 6 is cyan. So from the color code we know we are at the extreme or not. Sometimes it is useful to know the extremes, because when the distribution count was 6 at the extreme, that means all the 6 indices, 2 composite indices, Nasdaq and NYSE, and 4 major indices, S&P 1500, 500, Nasdaq and DJI. When all of them are sold out, it may be time for the market to recover. And if you followed that, the extreme distribution count of 6, that was followed by an accumulation count of 3, that could be the time to start buying again with higher confidence in individual fundamentally strong stocks. I had contacted Metastock again. The issue with fire, they have recognized it. They cannot confirm a time frame, but they mentioned it will take at least 2 more months. So I may have to wait before releasing it. I don't want to release it in a half-cooked fashion and see that there are still issues with fire. I can create these plots, the percentage MA calculations, as well as the total view accumulation distribution, but there are some operational difficulties. Let me see if I will release them with the operational difficulties, which I don't like, because Q systems, all of them are very easy to use. I don't want to complicate users' life, but I see these studies are so useful, I may give an option to the Q traders to choose them or not. We are not able to do this analysis on TradeStation. Jeffrey had a question. Can we do the market price? No, because we need an aggregator. And in case of Q Global, I'm using Fire as an aggregator. Without an aggregator, it is not possible to do the calculation on the whole Nasdaq composite, whole NYSE composite, and these major indices. That's why I'm not able to do it on TradeStation. When Fire was released, I was very happy, because these internal studies, I may say, they are invaluable in assessing what is really going on in the market. And because of this, I can even better know the turning points and position myself accordingly. I will see if I can release it with the operational difficulties, and if some people wants to download them, install them, they may do it. I need some work on that. I will try to do that without waiting for Metastock another 2 months or more. So what is our market view now? Market has dropped, that I could and many Q traders could anticipate from the market internal studies, market breadth total view, from the bearish headwinds coming. Right now it has dropped significantly. It is at support for some ETFs and mega cap top 20. That may be a time to buy. And I shared one tweet on Friday, and that is also going to help to see how you may use the, here I attached a snapshot of Q Sonar, but you could also use Q Finder on Q Global. That has similar signals. same Q signals and Q trade setups. And you will see from the tweet, there are many ways of using the sonar or finder, not something that you may be using every day. And I wanted to point that out. Of course, the capital letter ones that I am pretty sure all of you are using, if you are using Q systems, those are trade setups, bounce, headwind, box. Now I have added pullback, go with flow and breakout. Those are trade setups. Two of them, breakout and pullback, doesn't have a checklist. However, bounce, headwind, box, go with flow has unambiguous checklists. For breakout and pullback, it is not difficult to identify the trades, and I keep on sharing them on Twitter and forum. I'm sure you all are using these trade setups. In, I think, the last webinar, I also explained how you are able to use the pressure, sometimes associated with U-turn and gap up move. These three, I explained how you can use for buyable gap up. It is quite easy to identify them. And once you identify a buyable gap up, that is gap up with pressure, mostly it will be associated with a bullish flow also. Mostly it will also have a traffic light candle color change to green if it was not already green. When you see a buyable gap up like that, you may investigate the Q Zenith event chart that I mentioned to see what is going on. If it is associated with new product rollout, new geographic expansion, new CEO, or earnings data, or positive data for drug companies, you will be probably much more comfortable buying and holding the stock. Now let's look at the signals I highlighted on these three stocks. First is AMKR. Did it have any trade setup? No, there was no trade setup. None of these signals were there. Why did I share it then? What I saw was it was inside a squeeze. It didn't come out of the squeeze yet. The red color is showing it is inside the Q squeeze, that is price was getting contraction. And when it is inside a squeeze, there is a likelihood that the stock will move out of a squeeze. So the stock is moving in a narrow range. It is inside a Q squeeze that we can see very clearly visually on the chart, and when it breaks out of the squeeze in either direction, the hypothesis is that the longer the squeeze or the basing period, the bigger may be the move. So I noticed the squeeze and I saw it is at pendulum high. So it is not a lower price point. It is a stock in an uptrend. D is bright green, that is it is above both yellow and white direction line, and it is even above upper boundary. So it is at a high price level in an uptrend, and still it is inside a squeeze. Yesterday, Friday, market was down, but this stock from open went up by 3.9%. On a closing basis from Thursday, it was up by 4.9%, and it had a false move up, bullish false move 2.6%. That is, it tried to go down first but then reversed and went up. So these were all bullish signals. Now, interestingly, the market was pulling back for several days, but see, this stock was very strong and it is inside a squeeze moving sideways. When you read these signals from sonar, you may be getting ready for a squeeze release to the upside. This stock must be quite strong. What industry is it in? Semiconductors. And if you are following news, there is a huge crunch of semiconductors. So when I saw that in Q Edge, I checked out the stock's fundamentals using Q Vital. When it is retrieving the data for calculating the stock scorecard, let's check out its industry. semiconductor equipment. Weak market, but see the strength in the semiconductor industry. Very strong and the best acceleration possible, because we have 147 industries for USA market and is the most accelerating. So the industry clearly allowed me to buy. See the stock. The scorecard is fabulous. No other way of putting it. Excellent valuation, high earnings growth for 3 quarters, 3 years, high revenue growth or steady revenue growth, steadily increasing 3 quarters, 3 years, robust earnings quality, short squeeze potential. On Friday, on a weak market day, 87% of the stocks in its industry, semiconductor equipment, went up. Great fundamentals. And I could read many signals from the sonar, and let's look at the stock now on Q charts. By the way, I am already past 1 hour. If I cover everything I have in mind, it's going to take another 30-40 minutes probably. So if you are short of time, you may watch the video later. It will be on YouTube channel. I think these concepts will be very useful. The concept is buy fundamentally strong stocks that are not coming down in spite of a market pullback. Bullish shape candle in weekly, bullish color, jumped up after earnings, and you could see that from the event chart in Q Zenith, creating a base inside a squeeze. If I wanted to see the squeeze more visually, I could see it from the volatility chart. This is what is plotting the squeeze dots in the entry chart. It is inside a squeeze, moving inside narrow range. If it goes up, it may give a buy setup. And I added that to the fact that the semiconductor industry is the most accelerating industry. Fundamentally, it has very robust valuation, very high earnings growth. Those are star candidates, value plus growth. Another thing I mentioned repeatedly, when you see a stock is at a high price level, pendulum high, and it is still showing up as undervalued stock in Q scorecard, we are never going to short them. Those are very strong stocks. And if we are never going to short them, it is good idea to think of buying them. And that's why I shared a MKR. Even on a weekday, a starting point was the Q Sonar. That is a way of using Q Sonar that you may be not using now, but that is one way. Let's now look at the two other examples. Let's look at RLGY first. Since opened, went up by 5.7%, closed 7%. It had a bullish U-turn, bullish pressure, very high volume. Direction is red, dark red, meaning it was somewhere in between yellow and white direction. Again, there was no trade setup. However, it went up robustly and with a pressure and U-turn. Let's look at the chart now. And while looking at the chart, let me try to get its fundamentals also. It should be KRLG1. In Q technique, there is a bounce setup, and the bounce setup relies on a stock dropping sharply and suddenly, coming to a trend line support and going up from there. The checklist is to be applied on the daily chart. However, the daily memory is broken by this Thursday's move down, which happened after earnings. However, when I looked at the weekly daily together, this trend line support is still holding in weekly. So that is meeting the condition, checklist condition for the bounce setup that it should drop sharply, suddenly, stop at trendline support. The next condition that I need for a bounce setup is a close above previous day's close, which was true on Friday. When you combine the weekly and daily together in this way, we have a bounce long setup in RLGY. There was an upper tail on Friday, so I would probably, if I bought a smaller position, and if Monday it goes up above Friday's high, that may be the time to make it a full position for swing trading. So this is technically giving a bounce setup. We can see the bullish pressure, bullish U-turn, also very high volume, is giving a bounce setup when I combine weekly, daily together. The daily trend line is broken now, but the weekly trend line is still there. In fact, in a way, that is creating a false downside breakout, shaking out the weak hands after the earnings data. That may be a good time to buy with low risk. Now, before buying, we always look at the fundamentals, and I love and Q traders love the star candidates. Great valuation, robust earnings quality, very high earnings growth of 240% in the last quarter. In the previous quarter, it was 109%. Before that, it was negative. So it is not only high, it is rapidly accelerating earnings growth, short squeeze potential. Yesterday, the industry was mixed, not weak. Therefore, I expect its relative strength to be good in QH. Relatively, it should be stronger because the market was down. Let's check that out. Indeed, it was one of the strongest industries on Friday. Again, I could combine the industry's relative strength with the stock's fundamental strength and then the technical strength to find a buying candidate. Those are difficult to get stopped out on. Two very different industries. One is real estate sector, RLGY, one was semiconductor. And let's look at the last stock I shared in my tweet. That was ANAB, a biotech. And here we had several trades set up possible bounce and the newly designed pullback. It had bullish pressure. Direction is showing it is in a confirmed uptrend, both above yellow and white direction lines. Traffic light green means it was flipping to green. Earlier it was either yellow or red. There is a bull release signal also. Relative performance is strong, outperforming the market. That is of course true because it went up by a massive 10.5% on Friday. That is a huge move, and it had this pullback setup. You could find it out from Q Finder earlier. Now you will be able to find it out from Q Sonar or Q Scan on TradeStation. Let's look at the chart now. ANAB. Lovely, isn't it? This is the definition of pullback. A stock in an uptrend, pullback to support in this case, large number of trendline support stopped right there. Also fell or tried to fall below the yellow direction line. All those candles had lower tail. We see the newly designed indecision at the low. Signal came here, and on Friday it regained the yellow direction line with a bullish traffic light color. As is common in pullback case, the weekly we don't expect to be cyan, unlike in go with flow setup, because pullbacks are supposed to bring the price much lower than usual go with flow setup. That is okay. The weekly shape is bullish. And one thing I have repeatedly said, when you see around earnings it tries to go down and then reverses, that is actually a bullish sign. It shaked out weak hands at a robust support, trendline support and yellow direction line. Let's check its fundamentals, and no price for guessing, it will be fundamentally strong even for a biotech. Otherwise usually I don't share them. Now biotech industry may not be so strong. Let's check that out. Recently healthcare as a sector had been weak, and in fact those are the times I am starting to look for buying opportunities. Biotech as an industry is weak. However, if we see the base columns, they are showing acceleration. So in Q technique, I can buy either based on strength that will show up in the scorecard 1 day, 2 day, 5 day, or I could think of buying based on acceleration that would show up as pace, cyan color cells in pace 1 day, 2 day, 5 day. So the acceleration is allowing me to buy. Okay, it is retrieving the data. Stock chart we already saw. That's fine. Let's give it a few more seconds. While it is doing that, let me come to one more tweet, and here I am changing focus from swing trading or position trading to intraday trading. This is a tweet I shared February 26. That's on Friday, right? On Friday 1 p.m. when seen using Q fine-tuned charts pivot levels, gold ETF GLD and oil ETF USO are weaker compared to the market ETFs. On the daily weekly at a glance, gold is already down a lot, whereas USO was going up and seems to be stalling now. Is there an opportunity to short USO? And there was an opportunity, and I shorted USO using fine-tuned chart. Recently, some people asked during the webinars how to use the fine-tuned charts. I think I have explained it many times, and this is another live example. This is what I saw. Here I am looking at the 4 market ETFs and gold and oil using fine-tuned chart. This is running on one of my monitors during the day. IWM sharply dropped, however recovered. It was above early range high. DIA dropped, recovered, but below early range low. Nasdaq recovered above early range high at that point. SPY recovered inside early range. So relatively we could see IWM was the strongest, then Nasdaq, then SPY, then DIA among the market ETFs. What caught my attention is that relatively gold was much weaker, fell below early range low and never looked back. And oil fell below early range low, tried to go up, stopped at early range low again and started to go down. So one could short oil ETF USO at this point, or if someone missed it, probably at the magenta candle, which would be kind of a go with flow setup. However, I prefer to short here. Gold I would not have shorted because on the weekly daily already it was down a lot, so I didn't think of shorting gold, but I thought of shorting oil, and I did take a short trade at this point using vertical, and when I saw this magenta color candle I bought some naked puts. Now let's see how it turned out. Again, I am sharing these snapshots on Twitter before knowing the result. One thing I make sure, the stop loss is always narrow. But let's look at oil today at the close. Let me look at the intraday chart. Switching to 5-minute interval. In the morning session, I use 5-minute interval for fine-tune chart. It dropped. It came back to the early range low, dropped again. So you could short on this red candle or this magenta candle. That is what I did, and that would be the Q guideline. You could take it also as a short at this point. That would be a gap short day trade. Why? Because it opened here, that was just below previous day's low. So it was a gap short opportunity, though not a huge gap down move. For ETFs, sometimes we may not have huge gap down moves. Oil can have. It had a gap down open and then fill below early range low on this candle. That would be a gap short day trade setup. For that, the stop loss would be above early range high that was never hit. I didn't short it at that time. I shorted it at this point and then added to the vertical short position with naked put, and as you can see at this point, much more than the risk distance was covered. Maximum risk would have been this distance and my profit was this much, so I could easily book profit in the existing positions if I traded using the ETF and buy some options position using part of the profit. In this case, I traded using options from the beginning, so I might have booked partial profit and holding on to the remaining position. Let's look at the weekly daily now, what we can see. Weekly we see a prolonged up move. There was a bearish headwind 1 week ago. This week we have an indecisive shape candle, not a bearish shape. Color is also not bearish. There is a question from Jagdish. Hi Jagdish, I am Indian but I am living in Thailand nowadays. Let's go back to the chart in daily. This is the newly designed indecision at the top candle that came on Thursday. I didn't notice oil on that day, and I see now oil has a bear release signal. It is at a very high price level. If I look at oil, let's look at it using, I want to show something on the jump and thrust indicator. Now usually the Q Elite and Q Global have exactly same Q indicators flashing, but sometimes I have seen due to the platform difference they may change, and this is what was of interest to me. The indecision candle was on Thursday, but on Q Global it displayed a bearish headwind on Friday. That led me to hold on to at least partial position of my short USO position. I didn't close it. It didn't give a confirmed bearish headwind short setup. However, there was a bearish headwind signal. Price was at a very high level, and if I look at the jump and thrust indicator that shows overheated condition, the daily chart is showing that. The weekly will not show it anytime soon because it had a sharp drop, but the overheated condition, very prolonged up move, indecision candle followed by a bearish headwind signal, bearish pressure, high bearish volume, bear release, bearish shape candle, that led me to hold on to the position. Now when I did that, I also looked at Q edge. The energy sector was one of the strongest lately, but see what happened on Friday. Energy sector was one of the weakest, not the weakest was utilities. Energy was the second weakest, and if we look at the sector scorecard, on Friday I'm sorting by 1 day period. Energy, from being the best performer over 5 day period, over 2 day and on Friday it became one of the worst performer. It is showing heavy deceleration. That also helped me to decide to hold on to the USO short position, not exit it completely. It is showing weakness, and this is how Q traders like to short at the top and they would like to buy at the bottom, or using strength like the semiconductor stock I mentioned. Not that only we buy at the bottom, we buy at a swing low or at a base breakout, but we also are able to buy turnaround candidates like energy sector may be giving now. So I use that insight also to decide to hold on to the short position. 12:30, so 1 hour 30 minutes. As I explained, I may take some more time. Back to the biotech stock. Great valuation, huge earnings growth. From 11% 2 quarter ago to 24% to 260%. Very, very high revenue growth of 1900% in the latest quarter. Went up by 10.4%. So fundamentally, ANAB is very strong biotech. We saw the industry was accelerating and technically it gave many trade setups. That is why I shared the 3 stocks using Q Sonar, and I explained how you could use Q Sonar, or if you are using Q Global Q Finder, you could do that also to identify these opportunities in real time and take them. Of course, based on your market view. In terms of industry fundamental technical, I think all of these stocks were buying opportunities on Friday. I will quickly go through few more items. I think it will be of interest. I share trading ideas before knowing the result. The market was not so strong lately, but let's look at 2 ideas that I shared earlier. This is what I shared 3 days ago on SEM. Again, it was a value plus growth stock, but let's look at the complete snapshots that I shared. Healthcare facilities, industry and alternative industry healthcare facilities and services both were going up. It was much weaker earlier, then it was starting to go up. And when I shared it, it was up by huge percentage. The score was going up relative to other industries. Score percentage wise, it had a huge up move on that day. See the turnaround condition immediately visible from the cyan color score over real time. This was shared at 2:13 2:13 p.m. Eastern Standard Time. Showed huge acceleration as well. Industry clearly allowed us to buy. It was a turnaround candidate. Again, a star candidate in terms of fundamentals. Great valuation. Not only the last quarter, 3 quarters, 3 years. Great earnings growth. Short squeeze potential, robust earnings quality, up by more than 6% on that day. 77% of peer stocks were up on that day. This was a stock in a squeeze, coming out of a squeeze with bullish pressure from a narrow range, stock in an uptrend, pull back to support, that is trend line support, yellow direction line, become inside a squeeze, break out with pressure. Weekly, excellent support from the trend line support, bullish backdrop, bullish shape. Everything was letting us buy as a pullback to support, stock in an uptrend, just like Dr. Jeffrey would say, a stock in an uptrend, pullback to support, coming out of squeeze with bullish pressure. Read simply using the key signals. I love when Dr. Jeffrey uses those trades, and I am getting better at identifying them now. Now that the pullback setup is there on Q Elite also, Q Finder already had it, and you can see I think I did a good job, Dr. Jeffrey would say, I think. And the squeeze was very visible, very nicely visible in the volatility chart. It was coming out of a squeeze. That was my basis of sharing it. When did I share it? February 24. Let's look at SEM now. I shared it based on this day's candle. Stop would be just below trend line support. Stop was never hit. Stop was not hit, and yesterday it hugely gapped up. It was at the watermark resistance. I had taken a stock long position. Now it was close to earnings, and I mentioned it in the post that it was close to earnings. As I also say, for swing trading, it is risky to buy a stock just before earnings. But I had confidence on the stock. I was ready to hold it for the longer term. Why did I have confidence on the stock? Because of the industry I mentioned in my previous webinars, I think last one and the one before that, that I was willing to buy stocks that would benefit from COVID vaccination. This was one industry like that. Great fundamentals, great technical setup. So I was okay to buy even before earnings. I didn't mind holding it for longer term. And yesterday it jumped up by 18%. During the day it went up by more than 20%. So I have booked at least partial profit. Now if it pulls back, goes up again, it will give a go with flow trend following long trade setup. That may be a time to add to my position. But I think I bought it at the perfect moment, and I also took some money out of the table within 2 days. That was good discipline, I would say. That was a trade that worked very well, though the market was weak. And let's look at another trade. This one I shared some time ago, 15 days ago on 12th February. It's very useful to review the analysis. The same simple visual analysis. Broadcasting was very strong. Not a popular industry, isn't it? Not a not a glamorous industry, but Q traders are able to find profitable trades from all industries, not only from value stocks, but from growth stocks, or as I prefer it, star candidates, both value and growth, in all kinds of industries. So broadcasting, not glamorous industry, but QH showed it was strong and accelerating at the same time. This was a value stock, not growth, but that's fine. I'm allowed to buy based on either of them. If I have both of them, even better. But this was a value stock, short squeeze potential. The industry in itself was also strong. Again, this industry, AMC, this stock, AMC's networks, was going to benefit from COVID vaccination. And what was the technical setup? Stock in an uptrend, pullback to support, in this case, trendline support, in a squeeze, very nice squeeze, breaking out of squeeze. That was the setup. Okay, you can see it in the magnified picture even better. The three successive long lower tail candles held the trend line support. That was bullish, and then it broke out of the squeeze. Relative performance strong. For a pullback to support kind of trade, as I mentioned, I don't expect bullish backdrop, but the shape was bullish in weekly. It was time to buy in my view. The stop would be just below the daily trend line support. Let's look at AMCX today. When did I share it? 15 days ago, 12 February. That would be on this day. This day. This was my entry day. Stop was just below the recent low. Yesterday, it went up sharply. It was already going up. Interestingly, though the market was going down, this stock never came down. And this case I explained in previous stocks also, like SXC, never pulled back. That credit I give to this 360 degrees technique, where I am aligning fundamental, technical, industry, everything together. And there is a reason behind my buying. Either the market is bullish, or I am buying in industries that will benefit from certain things like vaccination in this case. So this stock went up sharply, hit the trend line resistance, was up by 22.5% at the close. During the day, it was up by 25% plus for the day itself. I had a large profit in the trade, and that would be the time to book at least partial profit because of the trend line resistance in daily, weekly, the watermark resistance also in weekly, and long upper tail candles in these four weekly daily candles also. So that would be a position to book profit. Again, a trade that worked beautifully. I think I have gone through many things today other than the usual market roundup. Let me recap them. And you may watch the video again if you want. Sometimes we need to watch it few times to understand how to use the technique. One is the event chart, where we know what are the events leading to market move. One is to look at the economic events, drill down to decipher positive correlation or inverse correlation with market instruments and decide our trades based on that. One is how to use the buckets and the real-time move relative to previous day, sudden sharp move, to see if it is getting exhausted or not. One is how to use the fine-tune chart to decide which one to short the weakest one, which one to buy the strongest one. Yesterday was not a day to buy, so how to short it precisely with low risk and also book profit with discipline. And we reviewed some of the earlier posts explaining and showing that those were shared before knowing the result, and even if the market came down, those trades did very well. Thanks a lot for being with me. You make it worth spending my time on these videos. I'm sure these techniques were useful. The way to use Zenith was also useful. I will not take more of your time today. Let's end today's session. I shared some stocks with you and I explained, at least to me, they all gave buy setup in some way or other. ANAB biotech stock pull back to support, stock in an uptrend going up again. RLGY bounce long setup. AMKR semiconductor stock never pulled back, consolidating inside a squeeze, may go up again. One thing common is that all of these, few things are in common. Technically, they are giving a low risk buy point. Second, all of them are fundamentally very strong. In this case, I selected stocks, star candidates, both value and growth. And third, they are in strong or accelerating industries. I will keep on sharing such ideas in my site, on my site, and also Twitter. You may keep an eye on them. Thanks a lot for joining me. I look forward to seeing you in my next session. You know how to contact me using my email ID, tradingprofitably@gmail.com. I look forward to seeing you again. Have a great weekend. And as these examples demonstrate time and again, if we are disciplined, if we have a robust system, there is absolutely no reason not to make some money from the market trading stocks, not volatile instruments, not speculative instruments, but using robust technique on robust stocks. Thanks a lot again. Have a great weekend. Take care. See you again. Bye bye.